It was a beautiful day for the stock market as we saw the S&P 500 and the Dow Jones Industrial Average hit all-time highs. I love days like these because it reminds us that if anybody would have bought a basket of securities that looked like the stock market at any point in history, you are making money if you're still holding on to those securities today. I know oftentimes we get folks that will say, well, shouldn't you be bearish? And don't you think a stock market crash is coming and this, that, and the other thing? Yeah, at some point that may happen, but don't get obsessed with that idea that it has to happen on your timeline. It's just a reminder that markets generally go higher much more often than they go lower. So we'll see what the fall brings, but right now we do see some positive vibrations in the stock market. Not only that, but we did see the Russell 2000 go back to a bullish posture here recently as well. The Nasdaq's been a little bit of a laggard, but even that is starting to shape up a little bit nicer. We did see the dollar fall today, so in today's trade application example, I'm going to concentrate on something that might take advantage of that falling dollar. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 20th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience here tonight. Remember, you can subscribe to our YouTube channel, and while you're there, check out our description area where you can sign up for our email distribution list, which will entitle you to seeing all the stocks that are giving you overbought and oversold cluster signals within the S&P 500 on a daily basis. In addition to that, we're heavy users of Twitter. Make sure you're following me at my handle at Brandon Van Zee, and make sure you're clicking like and retweet on those tweets that are associated with this Market Outlook video if you want us to continue to do them in the future. And then lastly, we also have a presence on Facebook. Feel free to join our group. You can see the web address embedded in the logo in front of you. All right, with that, let's go ahead and take a look at today's analysis. As you can see, I've got chart 4B pulled up in front of us here. So for those of you that are premium Market Scholar subscribers, you can always kind of follow along with what chart David and I are on by looking at that pink label in the upper left. Well, as we look at that, there's a couple things that I want to point out. There's an additional label that shows up on our chart today. It says yearly high today. We also see the same thing over here on the Dow Jones Industrial Average. So while we can only see 3 months worth of data on these specific charts, that label is there to identify that it's actually a yearly high, not just a 3-month high. And in the case of both of these, it's also all-time highs, which is even better. So great to see some strength coming out of those multinational areas, including the Dow Jones. Remember, that's really been our leader here recently. It hasn't been the case all year, but over the last couple of weeks or so, we've seen the Dow Jones kind of establish a leadership role, and it's off to the races. That was a beautiful move today on the Dow, up about 0.95%. S&P 500 was up 0.78%. We saw the Nasdaq up 0.98%, and the Russell 2000 led the way today, up 1.01%. You'll notice in particular for the Russell 2000, it was enough to switch from the posture of being weakly bearish to then bullish again. We can see that green background color coming in right here, as in prior days we were kind of just hugging that moving average line, but we had some separation from that here today, which was great to see. A really nice big range day there as well. Remember, when you look at this range label on our chart setup here, it'll turn orange when today's range is bigger than the average true range. And so we did see that on the Russell 2000 here today. The Nasdaq's bounce was nice. Don't get me wrong, a 1% move is a good move to the upside, but it just wasn't quite enough to change that posture over to a bullish posture. However, I will say this, when I was looking at this about 15 minutes before the market closed, when we were at our highs of the day, it was bullish at that point. So with just a little bit of a give back at the end, it was just enough for it to retain that bearish posture. So if we get even just the slightest move higher tomorrow, I would fully anticipate the Nasdaq also joining the other 3 indices with bullish postures. Let's take a look at our next chart setup. This will be chart 4C. And this is our 3 green arrows chart setup. As you can see, we do have 3 green arrows on the S&P 500, and we've had 3 green arrows on the Dow Jones for the last 3 days or so. Remember, the background colors on chart 4C will turn green if we have 3 green arrows. With the S&P 500, we just got it today because we got the MACD to go back to a green arrow there, telling us that there's momentum coming back into the marketplace to the upside. When it comes to the Nasdaq and the Russell 2000, we're just not quite there yet. We're still hanging on to those red arrows on the MACD, but You can see very, very close on the NASDAQ. So if we get a push higher on the NASDAQ tomorrow, not only will we get a bullish posture using the market forecast indicator, we'll also get 3 green arrows on this chart setup as well. Again, signifying that this is a market that's being controlled by the bulls at the current time, not the bears. Let's take a look at our longer term chart now. This will be chart 4D. It's our 1040 crossover method chart. Remember, this is a longer term view here. We're looking at 3 years worth of data. Each one of the candles represents 1 week. And so as we look at this, we're looking at the orange lines and the blue lines. The orange lines represent the 10-week moving average. Blue lines represent the 40-week moving average. All we're looking for are crossovers of the moving averages themselves. Now, when we kind of expand out these charts a little bit more, you can see what I was referencing before with the Dow. The Dow actually just hit all-time highs today for the very first time. Remember, with the S&P 500 a few weeks back, we had already been hitting all-time highs prior to where we were in January. But the Dow took a little bit more, maybe took it on the chin a little bit more at the beginning, so it took a little bit more of an effort to get back up there. But as of today, we now eclipsed those levels that we were looking at in late January there. So anyway, the longer-term picture continues to look quite good. We see separation from the more sensitive line, the orange line, from the least sensitive line, the blue line. We know that because we can see the MACD 2 line down below here kind of pointing upwards. We're not seeing quite as much separation out of the NASDAQ. Notice that's more flat down there, and the same thing can be said for the Russell 2000. So without a doubt, the strength of this market is actually in those mega cap companies, the big multinationals that I mentioned before. Let's now take a peek at some 12 grid analysis. So let's go over here to chart 4E. And as a reminder, when we look at the background colors of these charts, the green background will signify whether we have a bullish posture, and then the red background will signify if we have a bearish posture using the intermediate term line on the market forecast. And on the intermarket analysis, you'll see we actually have more bearish charts than bullish. Now remember, these are non-stock market oriented charts here, so that kind of makes sense. Money is drifting back into the stock market. It might very well be drifting away from some of these other areas. And so, as you can see, we did have a little bit of a bounce back in TLT. That was the one I had discussed a couple of days ago. We got that cluster signal on TLT. Well, yesterday it actually fell even further. Today we're getting a little bit of a rebound, so we're back up to 117.15. But with those oversold cluster signals there, it's possible we get a reversion of the mean move higher on the long bond, which would likely mean that the yields might fall a little bit, at least in the shorter term. As we look at some of the other charts, the VIX is back down to historically low levels, only 11.80 on the VIX. Extremely low volatility out there. I think the chart of the day, from my perspective, is the one down here in the lower left-hand corner. It's the dollar chart. This has been one of the most resilient charts for the last year or so, but we're actually starting to see a breakdown take place there. And of course, that affects a lot of other securities out in the marketplace. But be aware that we have now broken support on the US dollar. Let me right-click on that, maximize it so you can see it a little bit better. Now, we had a bearish posture on the dollar ever since we kind of peaked out on the green line right there. It would have been on this candle right here that we went bearish on the dollar. But because it was so close to that moving average, you know, and seeing how it had bounced so many times from that area in the past, I don't think we were really sold on the idea that it was going to have this big move lower. But now, after a few weeks have gone by, we're starting to see legitimate deterioration in price action here. Notice that we had a nice double bottom from this zone right here at the end of August to this area right here about a month later here in September. And today's candle broke down below that double bottom there. You're even noticing that the 30-day moving average tip is red, telling us that price is below a falling moving average. So you could actually go on record saying that the US dollar is bearish at this current time. Now that's going to cause reverberations across a number of markets. In particular, you'll notice that the commodities did reasonably well today. You'll see gold was up, and so were ag commodities. Crude oil was down a little bit, but remember, crude oil had already been making that move above its moving average prior to today, so maybe it's just a little bit of a give back there. Whereas gold is just barely above its moving average, and as it stands right now, ag commodities are just below it. So if the dollar continues to weaken, I would expect some strength coming into those commodities. Not only that, but as we go to our next set of 12 grids here, which will be the foreign stock market 12 grid, I would expect a lot of these charts to start firming up as well. A few weeks back in my strategy lab class, we did concentrate our trade on Israel, knowing that that was one of the really strong charts within the foreign markets even before the dollar started dropping. It hit a new 3-month high here today. It was up 10.21% over the last 3 months of this chart. So a really nice move out of Israel here recently. Some of the others are a little bit more of the bounce back candidate variety. They're not necessarily the strong trends yet, but as you can see, most of these markets were up today. And again, I'm going to pin that largely on what we saw out of the US dollar. In fact, all of these charts, as I look at them, with the exception of Mexico, were up today. And some of them were up really significantly. Take a look at South Africa, was up 2.48% today as just one example. So good strength across the board in a lot of those foreign stock markets. And again, if you assume that the US dollar is going to continue to deteriorate in price, then you might start seeing more money drifting towards these foreign markets going forward. So there could be some interesting bullish opportunities here for those that are looking for them. Let's take a peek at our last 12 grid now, which is the US sectors 12 grid. And on this particular set of 12 grids, remember that the S&P 500 is in the upper left-hand corner. And this is chart 4G for those of you that are following along at home. And so all the other 11 charts are the 11 sectors that make up the S&P 500. And as we're looking at these various charts, you're starting to see deterioration in the utilities and the real estate area. That can probably be pinned on the fact that interest rates have been so strong here recently. You're seeing the opposite impact on the financials. Notice that the financials have really erupted higher here in the last couple of days based off of that interest rate movement above 3%. I know Franklin Resources has been a stock that we've talked about not only in this market outlook presentation, but also in a variety of my dividend-oriented classes. That stock is starting to make a nice little move. I did notice that Bank of America, unfortunately, as a trade that we did here recently in this video, has been going up. However, I wanted it to go lower. So, you know, you're going to win some and you're going to lose some, but just be aware that it does start to look like those financials are starting to perk up just a little bit here. So keep your eye on that particular story. I did notice that the staples were up nicely today. Notice the staples were up 1.26%. That also brings up another trade we did here recently with Philip Morris, selling a put on a Philip Morris. I noticed that stock's been up nicely the last couple of days, but a lot of those staples are starting to kind of kick back into play there a little bit. We also see a nice trend out of the industrials right here. We find that the discretionary stocks hit a new 3-month high here as well. We saw materials. Now that's a little bit interesting because the materials haven't really been a leading area of the market recently. And so this is kind of coming out of nowhere. Keep your eye on the materials. Again, that leads right back to what we were talking about with the dollar. When the dollar starts to weaken, some of those commodities are going to start going up in value. You have to remember that those material stocks are the kind of stocks that benefit when commodity prices go up, at least generally speaking. You know, you have your iron ore producers and those types of companies that will benefit if commodities go higher. So, you know, materials could be kind of a sneaky play if you expect the US dollar to continue to weaken. That hasn't been as strong here recently. So this could be an opportunity for some upside action there in the materials. All right, so that brings us now to our trade application example for the day. So for that, I am just going to come right back on over here to chart 4A. And wanted to point out that, first of all, here's the S&P 500. That's a beautiful looking chart there. Love the way that that has just shown us higher highs and higher lows. Nice bounces off that rising moving average all along the way. But the chart that I actually wanted to look at today was going to be a foreign stock market. It's not one that we talk about a lot, but it's an important one nonetheless. And this is South Korea. Now, notice that EWY, as I pulled it up here, looks like it's more flattish here over the last, let's call it 3 months or so. But where we closed today was actually a 3-month closing high. Actually, I take that back. There were a couple of candles over here when it was just starting its downtrend that might have been a little bit higher exactly 3 months ago. But let's call it a 2 3/4 month high as we stand here today. Now, you'll also notice that for those of you that look at candlestick patterns, that this has a very familiar look to it called a head and shoulders pattern. Actually, this one would be an inverted head and shoulders pattern. As you see, kind of a left shoulder over here. Here's the head right here at the bottom, comes back up, and there's the right shoulder. And then it looks like we're sitting right at that neckline, about ready to break higher there. Now you'll notice if we look back a little bit further in time, so this is a 3-month chart that we're looking at here, but I'm just going to kind of back it up to a 1-year chart just to kind of give you a sense of where we've been on South Korea. And it's largely been kind of a downtrend ever since topping out here at 79 bucks in January. So it's been a struggle for South Korea, just like it has been for a number of other markets. But again, we see a key reversal pattern taking shape down here with that inverted head and shoulders pattern. And so that's what I thought we would concentrate on today for our trade application. Now, typically the way that you kind of measure this is you look at the distance between the head and where the neckline is. And so if we wanted to calculate that, we could really just look at, since we're sitting on the neckline right now, we could take the current price of 67.65 and then subtract out that low point there of 62.89. And that means that there's about a $4.76 price target that we would have. Now, in this particular case, I think what we'll do is we'll use what's known as a bracket order to have both an upside target and also a downside stop loss. So that way we don't get too caught up if things don't go the direction that we want. And as a reminder, we'll have plenty of trades that go against us. Remember, we're not perfect. We're going to have lots and lots of losing trades out there. So we always have to kind of consider what our position sizing tells us, what our kind of risk management dictates, and different things like that. So what I think we'll do is we'll put our stop loss maybe a penny below that low at 62.88. And that means that we will calculate our upside by taking this amount and adding it to 67.65, the current price. And so our upside price target would be 72.41. I'll add a penny to that just because I subtracted a penny below this stop loss area over there. So we'll put our target price to the upside at 72.42, and we'll put our stop loss to the downside at 62.88. And if we look at where 72.42 is on the chart, you'll notice that it's in a decent location. Right about there. In fact, right on that is 72.42, where I'm kind of circling. Now notice if you kind of scan the crosshairs to the left, that is right about at this juncture right here, where we had a whole bunch of these old support areas holding until it broke. So the idea being old support becomes new resistance. So we're basically saying we're going to tackle this thing, assuming that this inverted head and shoulders pattern is going to lead to a reversal. But once it gets back to that kind of technical battleground zone, we're going to sell out at our price target, assuming it works for us. Otherwise, if it doesn't and it starts going back into a downtrend, then we're going to at least give ourselves the ability to have some bounce possibilities until it hits its new low. If it hits its new low, then we have to just admit defeat, and this thing will be a losing trade, and we'll move on. So with that, let's go ahead and place the trade. And so I'm just going to right-click on the chart here, and I'm going to go to Buy Custom with OCO bracket. OCO just stands for one cancels other. So I'm going to click on that, and notice that will bring up our trade down below. Now, of course, you're going to want to position size accordingly. I'm just going to do the default and generic 100 shares here. But the top line is in green because that's the one where we're going to buy. And I do want to buy basically at the closing price. That's the difficulty with these videos, since we never know what will happen starting the next day. But since we ran the math and we ran our numbers from today's closing price of 67.65, that's what I'm going to shoot for to get filled at here on this trade. I am going to change it to good till cancel just in case it doesn't get filled tomorrow. And then right here on the second line, that's the first of our two different sell orders, because one cancels other means that if our price target to the upside is achieved, then our bottom side stop loss will be canceled or vice versa. One or the other things is going to happen. Either it's going to make us money the upside and we're going to lock in gains, or it's going to go lower and we're going to get stopped out at a loss. But either way, we want the opposite trade to be canceled at that moment, since we'll no longer have those shares. So on the second line there, the one that says minus 100, the first line in pink, that is our upside price target that it's looking at, the limit sell price that we're looking for. So on that one, what we selected was 72.42. And again, change your day to good till cancel here on Paper Money. And then on the next line where it says minus 100 again, that's going to be where we start talking about the stop order. So it says stop, and again, we're going to change that one to good till cancel. And our stop price will be right down below here. We can change it on that final line to 62.88. Everything else looks fine there, so I'm going to confirm and send. Review this one more time, and you can see that the base for one of our sell orders is plus 477, and the base on another one of our sell orders is also minus 477. So since those two numbers match, it's the idea of having a one-for-one reward risk type of a situation there. Okay. All right. So with that, I'm going to go ahead and click send, and we'll see if that gets filled tomorrow and how we do on that going forward. All right, well, I want to thank you for joining me here tonight. Again, exciting times here with the market today. Dow Jones hitting all-time highs, S&P 500 hitting all-time highs. Some strength there in the Russell 2000 as well, and a very good chance that the NASDAQ goes to a bullish posture tomorrow, assuming we get some upside potential in the market there. So right now, the side of the fence that you should be on as far as placing trades is likely going to be on that bullish side. At least that's what the market forecast indicator is suggesting at this current time. In fact, there may be some bounce back opportunities in a lot of those foreign markets if you also believe that the US dollar will start to weaken in the days and weeks to come. So with that, I want to wish you all the best. Have a great weekend. David will be with you tomorrow. I'll be back next week. But best of success with your trades and your investments. See you next time. Bye-bye.